Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So Alhamdulillah, Eid has been absolutely amazing. Spent quite a bit time with the family and it's been really good. Took time off work and yeah, it's been really nice. Just kind of a week ago this time I was kind of completely feeling burnt out, but the last few days it's been absolutely amazing to spend time with the family and so on. And Alhamdulillah, yeah. So, and last night I was watching the news, the Orange Man talking about tariffs and so on with a couple of friends. And it became apparent to me that I actually needed to do a video today because of what I've seen. And it's been brutal what happened over the last 3 months since basically Donald Trump took over the Oval Office and so on. And yeah, we were just watching the news and basically him talking about the terrorism, what he's done, and then making jokes about this and that. And while all that is happening, I was watching the futures because by then the market was closed. So I was watching the pre-market and I can see the markets were dropping by every couple of minutes. It was dropping a couple of percentages, and I was like, what is going on here? And as you can see here right now, I'm down. The last 24 hours, my portfolio has done about £4,000 or over 3%. And I have been adding money, I promise you. But right now, look where we are, £115,000. That's where we were, I think, October, November of last year. So wiped out. Literally, if I show you the last 3 months, what you'll notice, I'm down over £10,000 over the last basically 3 months. Right now, my overall gains used to be about £20,000 or so, £25,000 at some point. Right now we're looking at about 7,000 gains and or just over 6%. So if he carries on the way he basically what he's been doing in the last couple of days, I promise you that 6% will be wiped away and probably be in the red. So what I want to do today is just share with you guys my thoughts of everything that has happened over the last couple of weeks, even couple of months, and give you an opportunity to look into your portfolios and then potentially look at these 5 companies that I want to share with you guys today. So we'll talk about general overall markets, and then I'm going to give you 5 companies that are a buy right now in my opinion. And I literally plan another video right now that which I will be releasing at some point today as well, which is more of a watch list for anyone who is struggling to find quality companies and so on. So I'm going to do 10 companies that are high quality businesses, that are foundational stocks, that potentially are really cheap right now or will be cheap in the next few months. Because I don't really think we are out of the woods yet with regards to the tariffs and so on. That's going to be an ongoing conversation between Donald Trump and these countries for the next few months. So it's not going to be solved overnight, and the markets do not like uncertainty. So because of the uncertainty, he's now said what he needed to say. Now it depends on the other countries to start negotiating, to start basically maybe talking to him, whatever, and that could take a very long time. And as investors, we don't want to be sitting around and waiting for it. So if you look at the S&P 500 just today, in fact, I'll just show you the live data because that will probably be easier. If you look at the pre-market, what we see right now in the market right now, the pre-market, for example, Dow Jones is actually down 1,144 points. That's closer to 3% in Dow Jones. Okay, the S&P 500 is down over 3%. The Nasdaq's down 3.7%. The oil prices are down. The US treasuries are down. The European markets are down. So like for example, the 6,000 or 600 whatever is down about 1.7. The DAX, for example, is down almost 2%. The FTSE 100 has no business or whatever, but of course because the world is very much connected these days, interconnected if you like, it affects of course UK, because UK actually got 10% in terms of tariff whatever, but that's what they charge the US, and they basically get in a similar sort of a thing. So every single like market that you look at, even the Chinese markets, even the Japanese markets, or anywhere else in the world, they all down. Okay, including crypto is down. Okay, so what I'm going to do now is, and of course there's a lot of news, bad news everywhere wherever you look at. Okay, there's loads of bad news flying around, and as you can see here, I'm sure this will go down to at least, I don't know, 15 to 14 by the time the market starts because everybody will be selling. I don't think this will reverse basically by the time the market opens. I don't think this 1,000 whatever will go back to normal. But when we look at the S&P 500 for the last 5 years, and this is what I always come back to, is basically, yes, the news is bad right now. There's a lot of crazy stuff happening. People are scared, losing money, and your portfolios are in the red if not. Okay, and what does that mean for us as a long-term investors? We don't really need to worry about that. Okay, whatever is happening right now, it will pass. I promise you, it will pass. But something new will come out tomorrow. Okay, but what we're seeing right now will stop at some point, because when you look at the S&P 500 or any other basically indices over the last 5 years, when we click these 5 years, you can see the S&P 500 is 127% up. In the last 5 years, a lot of things has happened, including COVID, and look where we are. The Dow Jones is over basically 100%. Okay, up. And when Nasdaq's 160%, the FTSE 100 of all people is actually up 56%. So in the long run, the stock market will do well. But look at this. We've had loads of recessions, loads of market crashes. By the way, when we talk about correction, we're talking about 10 to 20% basically drop in the S&P 500 and so on. Okay. And over the last, since 1952, we've had all of these things, including COVID that happened in 2020. And since then, the markets come back and bounce back and actually gone up a lot higher. And if you look at this basically graph here, it shows you when the markets were up and how many times the markets were up, or what percentage, or how many times they were down. So in the 1931, the markets were down basically 40 to 50%, negative 52 to 40 basically, in between there. Then it carried on. So there are a couple of other years basically where it was around that same. But look at the markets overall basically in the green side of things. Okay, we're looking about 10 to 20% up, about 23%. That includes 2020 when the market actually went down. I can't remember, what's it, 30%, the S&P 500. Okay, and then a couple of other years basically in 2010, 2000 and basically 6 and so on. And then if you look at, there's 19 times when the market was up 20 to 30%, so in between around there. 2024 was one of those years. 2023 was one of those years. 2021, remember 2022 we were down about, I can't remember, I think it was about 15% whatever. But for the last 5 years, okay, we were up either 10 to 20% or 20 to 30%. The only year that we were down was basically 2022. So overall, the markets basically bounced back after whatever crash we've experienced. So right now, the people are selling are the people who are going to lose out. If you are buying high quality businesses, no matter whether the tariffs impact them right now or not, in the long run, these companies will be okay. I'm not saying go away and buy every single company that's been affected, but you have to be very selective right now. And that's what I'm going to do right now is for the next 10 minutes or so, 5 minutes or so, I'm going to try to give you 5 companies. I'm going to do quick basic analysis of these companies. And then I've got another couple of companies that videos that I planned to share with you guys, high quality businesses. When I started this entire portfolio thing or whatever YouTube thing, it was just my idea was to share with the community what is happening in the market overall, and of course my journey. There's about 10,000 of you right now that tune in to the basically videos every single week, and what I'm basically, I owe you that much at least to now say, okay, this is where we are and this is what we can do, and just ignore the noise. And that's exactly what I'm going to try to do. I'm off for the next 2 days, inshallah, so I'm going to do as many videos as I possibly can just to share with the community my opinion on what I'm doing and give you high quality businesses. And let's talk about the first company we basically for today is S&P Global. This is one of the companies that I have in my own portfolio, and currently for the year to date is actually up about 3%. But when the market opens today, it will be negative basically 1% or whatever. Okay, so it will be down by the end of today. And this is one of the companies that I've had in the portfolio for a very long time. In terms of business side of things, okay, this is how they make money. So the S&P Global, so we've got the market intelligence, we've got the rating side of it, commodities, indices, mobility, and in basically other things that they actually started to add to their portfolio very recently. Now, when you look at the majority of their money, 32% of basically revenue comes from this market intelligence. 30% comes from the ratings, 15% comes from commodity. Indices about 15.5. A lot of people know about this company because through the indices, because the S&P 500, the S&P Global or whatever, right? And then also the mobility is about 11%. So they have got very well diversified portfolio of products that are in demand. And when you look at this, okay, if you look at the revenue side of it, $14.2 billion is basically what they made in basically that the end of last year. Gross profit was 69%, operating income of 38%, pre-tax basically income of 37%, and that net income for this business was 27%. Okay, which is absolutely amazing in my opinion. So they have a very well diversified, they are very well run business. They're not going to go out of business anytime soon, and I'm not worried about this company at all. When we look at the financials, just to kind of give you a quick overview, we're looking at a company that is 156 billion market cap. It has a wide moat, and right now dividend yield of 0.76. The payout ratio is very, very low, and the latest increase was almost 6%. The 5-year growth rate of 10%. The dividend streak of 51 years of increase in that dividend. No matter what the company is going through, recession or no recession, the company has been doing absolutely amazing job. The payout, basically annually you get $3.84. Dividend is basically safety of 99%. The last 5 years they grew that revenue compound annual growth rate about 16% and the EPS about 10%. Profit margin, return on equity, return on invested capital is probably one of the best companies out there. Free cash flow, we're looking at about $5.5 billion right now, which means basically they can buy back their own shares. They can actually pay us more dividends if they want to, buy other companies into whatever, pay off any debt that the company has, and buying back their own shares and so on. So they could do a lot with that money. EPS expected to grow about 10%, revenue about 6%. Right now it's about 5% basically in the upside of 5% right now. $540 per share is basically where they think the price should be. The next company I want to share with you guys today is Novo Nordisk. This is one of the companies that I recently included in the portfolio, and genuinely probably one of the best companies out there that's undervalued at the moment. 302 billion market cap, wide moat. And look at this, a year to date is about 21% down. For the 1 year it's down 46%. Is now touching down. Okay, by the time the market opens today, it might actually touch that basically 52-week low. So $66.88 is basically where it needs to be. It's not far off. If it goes down after the market opens today, then basically it will touch that. And as you can see here, they have a nice dividend of 2.3%. The payout ratio is only 49%. Latest increase was 21%, and the 5-year growth rate we're looking at about 22%. Dividend streak we're looking at about 28 years of increase in that dividend. They're not in the basically S&P 500, so they cannot be a dividend aristocrat. Annually you get $1.62. Safety is 99%. The 5-year growth rate for revenue and basically EPS has been absolutely amazing. Profit margin, return on equity, return on invested capital. You will not find better companies out there in the S&P 500. I promise you that much. Free cash flow over $10 billion right now. EPS expected to grow 25%, and revenue is expected to grow 26%. Morningstar is saying it's about 23% upside from where we are. $89 per share is where they think the price should be. Right now we're looking at in the 60s. The next company that I'm going to talk about today is Lam Research Corporation. This is one of the companies that have been on my radar, on my watch list for a very long time, and I'm going to continue watching this company, especially right now where the markets are very, very volatile. 93 billion market cap, wide moat, $73 per share right now. Dividend yield 1.27, so it's not bad at all. The payout ratio very low. Latest increase was about 15%, which is absolutely amazing. The 5-year growth rate is absolutely amazing. Dividend streak of 10 years. You get 92 cents for every share of this company that you own. They did it split recently. Dividend streak is safety is 66%. Revenue and EPS basically grew about 11%, and EPS grew about 20% for compounded annual growth rate for the last 5 years. Profit margin, return on equity, return on invested capital, probably one of the best out there. 4 billion free cash flow right now. EPS expected to grow about 24%. Revenue about 19%. Morningstar saying it's about 14% upside from where we are. $86 per share is where they think the price should be. Right now is $73 per share. And if you look at basically year to date, you can see it's just up about 2%. For the 1 year, it's up down 23%. Wall Street is also saying it's a buy. Now let's go back and just finish this video off. Qualcomm is the next one, another high quality business, another basically semiconductor company, 170 billion market cap, excellent dividend of 2.3 billion, 2.3% and yield, payout ratio 31%, very very low. Latest increase was 5%. They've been doing this quite for the last whatever years, so they increase it about 5 to 6% every single year for the last 5 years. Dividend streak, I've actually had this company I think for now 4 years in my portfolio. Dividend streak, we're looking about 21%, 21 years, sorry. Annually you get $3.56. Dividend safety 80%, 5-year growth rate of revenue, and EPS has been absolutely amazing. The reason I want to share these with you guys is to show you these companies have done absolutely amazing job, and they are expected to do more or less the same over the basically coming years. That's the whole purpose of this. I don't like sharing information just for the sake of it. It's just to kind of give you a comparison. This is where we used to be in the last 5 years, and this is where we're heading potentially next year and the next few years, if you like. Okay, when it comes to profit margin, return on equity, return on invested capital, again absolutely amazing. Almost a $13 billion of free cash flow, and then you can see 15% EPS growth expected next year, and revenue is more or less the same as well. And we have another undervaluation, so 14% upside from where we are. $180 per share is where they think the price should be. Right now we're looking at about $150 per share, and a year to date is actually flat. For the 1 year basically is down about 10%. So by the time the market opens today, it's actually down 4%. So that will be negative 4% a year to date by the time the market opens today. And the final company I want to share with you guys today is Merck, and this is another company I have in my portfolio. 227 billion market cap, absolutely amazing dividend to 3.6, and that's probably growing every single week because it's going down quite a lot. 40% when it comes to payout ratio. The recent increase was really good. Basically they've increased this for the last 13 years, and then you've got amazing basically dividend safety of 90%, so nothing to worry about. They grew that revenue about basically 11%. EPS is absolutely amazing, but this is not the full story because there's a company they acquired recently, so that has changed slightly. And then when it comes to profit margin, return on equity, return on invested capital, again, really great company. Free cash flow of $18 billion right now. 17% EPS growth expected for next year. Revenue about 2%. Morningstar is saying it's 22%, and upside from where we are. $111 per share is where they think the price should be. And right now it's $86 per share. Before I forget, Sharia compliance side of things, you can pause the video and have a look at that. Nothing to worry about in terms of Sharia compliance side of things. And as you can see here, year to date is down about 13%. For the 1 year, about 33%. Wall Street is saying is a buy. Every single company that I shared with you guys today is a high quality business in my opinion. I do own basically 4 out of the 5. I've got another video coming up potentially this afternoon, this evening. 10 companies, similar sort of a situation, all down a lot, and potentially some of them might be actually fairly valued. But the most important thing for me is that I'm going to share these with you guys so you can add them to your watch list. You might say to yourself, you know what, it might be, you know, the S&P Global is a great company, 5% upside is great, but I need 10%. And that you might get even that opportunity. So like I said to you guys, if we look at today, for example, right, basically 2.8% down. So by the time the market opens, if it's down 3%, okay, that's basically 3% on top of that 5% that you've got. So you're looking about it, and then you might want to say, you know what, I'm going to wait for a week or two. If this continues, okay, like I said, the uncertainty is what's killing the market. It's not just what he announced yesterday. So moving forward, there's going to be a lot of negotiations back and forth. There's a lot of uncertainty, and the stock market does not like that. So if we are just careful, okay, potentially we might be getting opportunities. Just to be transparent with you guys, as you can see, I do own S&P Global. This is my gains. This is my average. The next one is Qualcomm. As you can see, this is the company, 30 shares, and you can see basically where I am. The next one is Merck, again 36 shares. I'm still buying more of this company every single week. I'm up about 9%, $80, and basically it's my average for right now. And finally, Novo is the next one, 31 shares so far, 17-18% down so far, and it's again another company that I'm buying as we go along. So that's what I want to share with you guys. I'm going to do a few more videos inshallah in the next couple of days. Like I said, I've got a bit of time, and whenever I get time inshallah, like I said, I'm not going to disappear. I'm going to continue doing this wherever I get a chance inshallah. Some days will be good, some days might not be bad, might not be great. One thing I'm going to tell you guys is the Discord is now free. You can join, but there's our brothers who are actually moderating and doing all sorts of amazing jobs. They've actually tidied the whole thing up, cleaned up, and now what they're doing is actually amazing job in terms of basically adding new members, sharing their wherever. They've now taken over. I'm just kind of watching them from far inshallah. So it's free, you can join it. I'll put the link on the description. You can join and see what the brothers are doing. Hopefully that community will help you guys. Don't join in the Patreon account until I actually come back and fully, because I do not want to basically ask you to pay for something and do not post anything. Do you know what I mean? That's not gonna fly with me. So you keep watching the videos, like the video, subscribe to the channel, join the Discord where hopefully brothers will help you, brothers and sisters, you know, are helping each other just to do well in this basically crazy markets. Anyway, I'm going to stop the video here. Have a wonderful day. Assalamu Alaikum.